And thank you very much for joining me. I hope you can see me. I had to adjust the camera there. Apologies if I made you a little dizzy, but I think that I just want to double check. Can you guys see me? Can you see the screen? And can you hear me? Just want to double check here. Okay, good. Thanks, Kobus. Excellent. Thanks, guys. Alrighty. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXM. My email address rshaw@fxm.com. I'm just going to bring up the high risk investment warning and the market commentaries disclaimer. I just want to also double check. Tomorrow we're doing our Outlook 2023. Does anybody need those links? We're doing one in the morning, which is going to be early, sort of on the European time zone because it's designed for us. So the first one's 6 a.m. That's Oz. And then I think then it's 3 p.m. UK time. Okay, cool. There's a few people that need the links. All right, give me a moment. Let me just get those links for you. Okay, so the first link's the early one, right? They're exactly the same webinars, so don't feel obligated that you've got to log in at 6 a.m. That's for a different time zone, but I'm going to put the I'll put it in the chat anyways. This one is the early one. I actually think it's the same link. I think there's a drop-down menu. Let me just see if it's the same link. I think there's a drop-down menu, and then you choose the time zone. Let me just double check this. Yeah, it's exactly the same link. I beg your pardon. So just go there and then register for the one. Register for the one that you'd like to attend. They're exactly the same. All right, let's bring up our market commentaries disclaimer. Yeah, hey Paresh, it's going to be recorded. Yeah, I'll put the recordings on to Telegram. All right, and just our references: MarketScope and TradingView.com. All right, so we're just going to go for just to the top of the hour here, and then I'm going to switch. We'll go through to the crypto minute. Yesterday we saw the interview with Jerome Powell at the Economics Club of Washington, and in that interview, I think David Rubenstein asked him some really good questions, and what I wanted to show you is how the US real rate reacted, how the dollar reacted, and how the Nasdaq reacted, because I think this is going to give us, well, this gives us a very good example of just the relationships between the real rates, the dollar, and the risk markets. Okay. Jeannie, I've put it into the chat. Can you see the links in the chat? I'll see if I can just send it to you privately. I'll send it to everyone as well again. Okay. All right. So take a look here, guys. This is where the interview starts. Okay. So it starts over here. Now, what happens is initially the real rate comes down. Okay, that's this candle here. Take a look what happens to the dollar. Dollar comes down, so there's a positive relationship. As the real rate moves, the dollar moves in the same direction as the real rate. What happens to the Nasdaq? Take a look. Nasdaq's moving as well. Look at the volatility, but it's moving in the opposite direction. Okay, in other words, the Nasdaq has that inverse relationship to the real rate. We're not going to look at the mathematics behind it today. Maybe we'll do that on Friday. But the idea is, as the real rate moved down, dollar moved down, what happened to the Nasdaq? Moved up. So we're looking at the hourly time frame. Then what happens is, as the interview continues, it turns out that there was nothing really new added to what we heard last week. What we heard last week was effectively that we've entered into this disinflationary process. That was reiterated. What was also reiterated is there's going to be higher rate hikes. Nothing new there. We know that there's at least one rate hike coming, possibly two, and then we'll see. But the idea is, as soon as it became clear that there was nothing new to be added, we've got then the movement. Let me rephrase it. So the initial reaction is that the risk market moves up, the inflation moves down. Then Jerome Powell says there's going to be more hikes. There is a movement up. There's a movement up in the dollar, a movement up in the real rate. The NASDAQ comes down, but then it becomes clear there's no real new information. So then what happens is the dollar carries on moving down. Eventually the real rate moves down. What happens to the NASDAQ? NASDAQ moves up. So you can see that the way that the real rate moves, based very much on the communications coming out of the policymakers, affects the greenback, affects the risk markets. The reason that we're looking at the NASDAQ here is because the NASDAQ is so sensitive to interest rates. So it's a very good experiment, a thought experiment. Now we're looking at the hourly. You can do the same thing, but we can go, say, let's go through to the daily. Let's see what happens on the daily here. Okay, so now on the daily, we can see that by and large, there has been a movement, okay, down, a movement down by the real rate. There's a movement down by the dollar. There's a movement up, okay, movement up by the NASDAQ, okay. Then if we go and take a look at what happened just over the last few days with regards to the real rate, and specifically this was a catalyst from Friday when the non-farm payroll came in at 517,000. You can see that the real rate shoots up over here, dollar shoots up over here, and then we have the NASDAQ facing some sort of resistance here. Okay, so it doesn't shoot down quite into the neutral channel, but it certainly stops moving up, and we get two red candles here. You can go up, go through to the weekly, okay, and here on the weekly we can extend. Here is the real rate moving down. Here is the dollar moving down, and we're looking quite far out now. And here is the NASDAQ moving up. So you can see that these relationships, we started at the hourly, we moved out, and now we've got a bird's eye view. So what's the big deal about this? Well, the big deal about this is we now need to ask ourselves, what's going to happen with interest rates? Because if we can have some sort of an idea of what's happening with real rates, then we can have some sort of idea of what's going to happen with the dollar. If we have an idea of what's happening with the dollar, well, that makes trading the majors perhaps a little easier. We have more information there, right? If we take a look at the NASDAQ, well, is the NASDAQ responding? What's happening with the real rate? Now, another interesting bit of information which came out yesterday was the fact that the disinflation process has started. That we knew from last week, but it's more apparent in the manufacturing sector than it is in the services sector. That's something that came out yesterday. And then something which I think is quite important, the Fed is monitoring services ex housing. Okay, so there's a lot of information there. So what I'm taking a look at in the next series, I want you just to take a look. This is the ISM manufacturing, but it's ISM manufacturing prices. So we look at the prices. That's under 50. So we can see that the the inflation, the prices from the manufacturers under 50, they contract. There's a contraction there. If we take a look at the services sector, which is the next chart, okay, they are coming down. They are coming down, but they're not below 50. And I don't believe that the Fed wants them to go below 50. They just want them to get closer to 50. And what's going to be interesting is how the services prices comes down, specifically ex-housing. Now, this data here is not granular enough for us to see what's happening ex-housing, but where it does get interesting, okay, is next week on the 14th, we're going to get the CPI. So this is the calendar for the CPI. And there is a component within CPI that is services ex-housing. It's not something that we've looked at previously, but the fact is now that the Fed has given us that information, that's really what we want to look at, because it's what the Fed's going to be looking at. And if we can get an idea of what's happening with the inflation readings, services ex-housing, that brings us back to, okay, what's happening with the real rate? Because if there's progress on that side, well, then there's going to be progress in the US dollar, there's going to be progress in the NASDAQ. When I say progress, I don't necessarily mean progress the upside. I mean progress in terms of the trend, okay? So if we just go back to this calendar here, and we go through to the core inflation rate. So the expected core inflation rate is 5.5%, so it dropped from the previous 5.7. But however, what I want you guys to take a look at is the month on month, okay? So the month on month is forecast at 0.3%. That's, I think, what we've got to take a look at, because I just did a very quick sort of calculation here, which I want to share with you guys. I'll put this on Telegram if you want to get the formula. But what I've done is I've annualized the 0.3%, so the 0.3% over there. So if you annualize 0.3% using this formula, you actually get over the course of 12 months 3.66%. That's still a bit high. That's still a bit high. Remember, the Fed wants to get through to that 2% target. And this is now where I think we can start focusing on services ex-housing, because why do they want to take housing out? Because housing prices are coming down noticeably, okay, I beg your pardon. And the rents have topped, they're topping out. So take that out of the equation. What's happening to the rest of the services sector? And the Fed wants to see those prices coming down. So we want to actually get that 0.3%. So we want to see this 0.3% over here. Well, if that comes in at 0.2% on an annualized basis, that makes a big difference, because if you use the same formula, but instead of putting 0.3%, okay, you put 0.2% into this formula, well, then you actually get an annualized number of 2.43%. That's much more comfortable. See, this 0.3% month to month is still a bit high, but once we get down to 0.2%, that's going to make a big deal. So the idea here is we've got a lot more information to work with, and because we've got a lot more information to work with, we can make much better and much more informed decisions. And it all comes back, okay, it all comes back to what's this relationship here. And we're going to continue monitoring this relationship. And we continue monitoring this relationship, say, with the DAX. So we looked at the DAX in a fair amount of detail yesterday. Let's pop the DAX in at the bottom. Okay. Now, yesterday we saw there is a inverse head and shoulders. We saw that on the DAX, is that inverse head and shoulders. And that inverse head and shoulders is a very positive inverse shoulders, because we've got a strong impulse move here. If anybody needs to take a look at that video, it's on our YouTube channel. It's also on our Telegram channel. Okay, so the idea here is to keep an keep an eye on the real rate. Now, I know that we're looking at the US real rate here, but we're in a situation where the US real rate is really a proxy for global real rate. We want to see that move into the zone, what we call zone 3, which is between the lower blue, lower red. We want to see the DAX carry on in the upper red, upper blue, what we call zone 1. And at the same time, the dollar needs to cooperate as well. Damir just asking, Damir, I'm going to put my email address. I'd like you just to send me an email, and I'm happy to respond just with all the recording information and the Telegram group address. But just easiest for me if you send me an email, okay, and I'll respond sometime during the day. So anybody that needs information, just shoot me an email, rshaw@fxcm.com, and I'll respond on the emails there. Okay, cool. That brings us to the top of the hour. We're going to conclude. No E. There's no E. Okay, I spell my surname without the E. RSHOR. Jeannie, RSHO. No E at fxcm.com. Okay. So this is the address. Alrighty, let's conclude at this point, and I shall continue in the next webinar, which is our Crypto Minute. All right, guys, thank you very much. Have a very good day ahead, a good evening, and we shall chat tomorrow. By the way, just before everyone goes, I'm going to cancel the morning market review tomorrow because of the outlook 2020 in the morning. So we will reconvene on Friday. All right, guys. So speak to you guys then. Cheers.